Welcome everyone to the Premium Options YouTube channel. Obviously you're brand new to this because this is our first ever video that we're posting. So I just wanted to welcome you guys and say thank you for viewing the video. Now today, before we get into the main thing, the reason why you clicked on this video, I do just want to urge you to subscribe to this YouTube channel. It really does help out the channel. Just throw a like or a comment of what you like and don't like about the channel. And on top of that, we do have some free resources for you guys, a completely free Discord in the link down below where we talk about market news, market catalysts, things to watch for the week, and a bunch of other helpful resources for you to just make it easier to profit in these markets. So if you guys want that or you want to join the free Discord, it's in the description down below. So enough with the shameless plugs. Let's actually go into what we're going to be covering today. Now that's going to be cash secured puts. We're going to be selling puts on Robinhood. I'm going to teach you how to do that very simply. Now, if you're not aware of what cash secured puts are, you've heard them. I'm going to make another video explaining exactly what they are in a simpler form, but we're just going to learn how to do them on Robinhood. So basically, it's when you have a bullish sentiment on a stock and you want to make a premium off of that stock. So basically, if a stock's trading at, let's say, $100 and you really want that stock at, let's say, $90, you can put a cash secured put or write a put at $90. You collect some premium for that, and if the stock gets to $90, you are then forced or assigned to buy those shares at $90, and you still get to collect the premium. Now if the stock price never reaches $90, you still collect that premium, you still collect that money, but you can now repeat it over and over and over again. So this is a really good way to earn some passive income or get a stock at a cheaper price that you really like. So today we're just going to do an example of a very cheap stock, because you can see this is just an example account that I created a couple days ago just to show and teach you guys some examples on this. So we're going to pick a very cheap stock. Now when you're actually doing this strategy, you do want to pick a stock that you wouldn't mind owning 100 shares of, because if you do get assigned, then you're going to have to own those stocks. So you don't want to pick a trashy stock like the one that we're going to be using today. But for example's sake, we're just going to pick a very cheap stock, which is Sundial Growers, trading at around 87 cents. So once you've picked your stock, then you want to go to here. And before any of this happens, you want to make sure that you're approved for options trading in your account. Now there's 3 different levels on Robinhood. The more experience you have, the higher levels you're going to get to. So just make sure you do that before you get to this point. So the first thing you want to do is come to Trade Sundial Options. It's going to bring you to this option chain. Now, since the share price is so low, it's already below $1. The only strike below that is 50 cents. Now, obviously with other stocks with higher share prices, you're going to have more options, but this is just for an example's sake. So the first thing you're going to want to do is come over to Sell Put, because you're going to be collecting the premium for selling this put. Now again, if Sundial Growers gets below 50 cents by expiration, I am going to be required to buy 100 shares of this, but I am going to be collecting a premium, which is this button right here, and this is what the price is. So the first thing we want to do is come to expiration and pick your expiration. The farther out you go, the higher the premium. As you can see, it's currently at 1 cent, which means I'll be collecting $1 of premium. But if I go out as far as January 2023, you can see that the premium jumps up to 21 cents, which means I'll be collecting $21. But that's because this has more time to reach 50 cents by that expiration. So we're just going to keep it simple, and we're going to do it a couple weeks out on August 6th. Now we're going to click on the plus, and you can see right here that we're going to be selling a put at the strike price of 50 cents, and we're going to be credited 1 cent per share, 100 shares, which means we'll be gaining $1. Now again, it says the max profit is $1 because that's our credit. The max loss is $49, because if this goes to 0, we're purchasing these shares at 50 cents. 100 shares, that's $50, and if it goes to 0, we're going to be losing out on $50. And then obviously take that $1 difference. $49 is our risk. Now, once you've clicked on your actual strike price that you want, you have to make sure you do a couple of really important things. Make sure you're actually selling a put, because this is a pretty common mistake where you get super excited if it's your first option. If you're just jumping right into it, make sure you're actually selling a put and you have the correct expiration. Next thing is, once you've selected your strike, you click on it and it's going to give you a couple other details. Now, it's really important that you understand the Greeks. That's not for this video. I'll make another video explaining that. But another really important thing is the bid-ask spread. So as you can see here, the spread is very small. And a reason for that is because there's just not a lot of people buying in at this options price. Now, you can also tell that by open interest and also volume. The open interest is the current open positions in this strike price for the option you're trying to execute, which is selling puts. Now, implied volatility is another important thing. That basically is telling you how volatile, how much this stock actually moves, and the possibility of it moving to the strike price or above or below. So there's a couple other things that you need to know about, but again, that's for further videos. This is just a beginner's guide to selling cash secured puts. So now that we have selected cash secured put, we've selected our strike price, we are getting our premium of $1. So let's just review it. Now we click on continue. We're going to be selling one contract at a limit price of 1 cent, which we're going to be collecting that premium. Credit means you're getting money. Debit means you're giving money. And then you can set for expire. It's either good for today. So if it does not get filled for today, it's going to cancel, or you can do good till canceled. So it's basically going to keep going for at least 90 days. Now, when a bid-ask spread is a little bit wider or there's not as much activity going on there, you can do good till canceled, so you actually do get filled. Then you're going to want to click on review order, and right here you're going to see minimum credit. You're getting $1 for this, and the collateral that you're putting up is $50. And right before we submit, it also says you're agreeing to buy 100 shares of Sundial at 50 cents per share before August 6th. Now, if you aren't at 50 cents per share, you're going to keep your $1 credit, even if you get assigned or you don't. But if you do get assigned, you're going to have 100 shares at 50 cents, and then you're just going to have to live your life. And on that point, you can then do covered calls, which will actually be our next video, because we'll have 100 shares of this. So tomorrow we'll actually do a video on how to sell covered calls. And then finally you click submit, and there you go. Now you're just waiting for it to get filled. When it's queued, it's in the market and you're waiting for this to get filled. So if by August 6th it's below 50 cents, we are going to buy 100 shares of Sundial Growers. Then you click done, and now you can see your buying power has gone down by $50 because you do have an options queued, and you can even see that down right here on the pending orders. So if you guys enjoyed this video, if you learned anything brand new about cash secured puts or how to navigate around Robinhood, I'd really appreciate if you could leave some support, likes, subscribe to this channel for more videos like these. We're going to be doing daily videos on everything having to do with trading options and stocks and investing. So if you guys think that's something you'd be interested in, make sure to follow and also join the free Discord link down below. And I'll see you guys in the next video. Peace.